Morning all, how are we doing? Morning, Danny, Martin, it's time, Baggy, Stevie, Virginia, John, Rodrigo. How are we all doing? Excuse me. Before I get my throat immediately, that's a good start, isn't it? Right. So, yesterday we had some news. We'll start off with the news. Macklem didn't do a lot yesterday. Unemployment claims had a big spike on the US dollar yesterday. So we had a fair bit of movement yesterday on US. There wasn't particularly huge ADRs yesterday, but we did get some decent movement on the US. So we had a good ADR move on quite a few of the US pairs. They're all retracing today. So as I suspected, it didn't have the huge impact. Normally, if we see unemployment figures coming down like that, normally the US dollar will go through the roof. But interest rates are maxed out. So we didn't get a sustained rally, and it is all undoing. So any of these US dollar mean reversions you took yesterday are all starting to play out. But we'll see what happens this morning as to whether or not we get a continuation on that. So that was yesterday's news. Today, we've not really got anything. We got Powell speaking later. So this has got the potential to be a very volatile news event because we've got the Fed debt, or the debt crisis going on in the US. He's going to talk about that, obviously. So there's going to be some potential bombs dropped during that. It may not happen, but potentially it could. So just be aware of that with the US this afternoon. We've got retail sales for the Canadian dollar, an hour pre-market, but that's it. So there's no real news today. So the market will either have a fairly flat day today, or it'll reach and undo a lot of the moves it's done. We get a lot of profit take moves on Friday sometimes. So we'll see. Difficult to forecast anything today, really. So, but be aware of that. That's the only news event we've got this afternoon. Other news today from overnight. We got some news on China trade, which isn't really that relevant. The inflation figures for Japan came out overnight as expected. Nothing new. So just normal there. Treasury's cash balance falls. Yeah, we know you're in trouble. And that was it, basically, overnight news. The only other thing we had late yesterday was this from Bullard. Reaffirmed his support for lifting interest rates further as an insurance policy against inflation. So this is what I was talking about yesterday with these fundamentals. We've got 5 minutes to the open. Where we're sitting at the moment at this maximum 5.25, which the Fed have said they want to hold for the rest of this year. These figures now dropping on unemployment and the slowdown in inflation drop means that they have got potential now maybe to do one more. So we might sneak another one in. We weren't expecting it. We were expecting the US dollar to have peaked and now start to flatten out or potentially drop. There is now potential for possibly another rally. So we have to keep our eyes peeled on the news, basically, to see what happens with that. Obviously, if they default on their debts, probably not going to be good, is it? So that's news. Yesterday, results for the EAs, or for the EA, the strategies. ADR reversal was banked 0.26%. 0.17 bank today, sitting in 1.17. Nothing in drawdown. So that's all fine. Everything else did drawdown control yesterday. 0.22 yesterday on H1 M5, sitting in 0.75, nothing in drawdown to worry about. 2.2 done today as well. So just really not able to bank anything yet. Got yen exposure long, but everything else is pretty much the same. So just nothing really moved yesterday that could get us into any profit. Yesterday, we lost 1.46% on H4 M5. That's sitting in 2.64. The main drawdown at the moment is Euro CAD. It's only 1.2, so not an issue really. And US dollar yen. So yeah, nothing much banked on that. It's banked 0.25% or 0.3% this morning, 1.46 yesterday DD. So still up on 12.29% on the month. And H1's done 18.46% this month as well. So The H1 hedging set file sitting at 8.4648, same as it was yesterday. Nothing's above 2% on this either. 1.6 on Euro US dollar. We seem to be just hovering around on that. Everything else is just fluctuating, not really banking either. So we lost 1.404 on that yesterday, 21.6 on the month. Banked a little bit of that back this morning. So nothing much moved yesterday to bank anything. I think it was negative 0.3 or something yesterday. So. Right. So ADRs, nothing to look at. We've got 2 minutes to the open. So I'm going to try and manually trade the open this morning on the Fidelcrest account. Where are we? Let's have a look at the size of this range. So I'm going to go for the 5-minute pre today and attempt to get a trade on that. Got 1 minute 23 to the open. Morning, everybody else I haven't said hello to. Morning, Diamond. Morning, Rodrigo. Morning, Amar. Neo, Dreska. How are we all doing? So yeah, I'm going to try and manually trade this opening range today. God, manual trading. 0.5% lot size is 60. So there's your 5-minute pre-market opening range. I haven't got the ORB EA on here, so so there's your 15. Your 15-minute pre is there and there. Your 5-minute pre, if you want to take it, is there and there. So it's pretty much the same thing today. So I'm going to go with 60 lots, long or short. Morning, Darren. Morning, Garrett. So 30 seconds to the open. So I'm going to get ready to manually close these out when the trades are executed. Short on the 5-minute. Stopped out straight away. Flip long. A bit whippy today. Looks a bit whippy at the open, doesn't it? So double-ended stop out to start with. Good start. Diamond, if you set Price Action Toolkit to use no magic number, will it then see and report trades taken manually? No. You can't not use a magic number. I've never tried, but you can't not use a magic number. Even if you use 0, it doesn't. To be honest, I don't know. I've never even tried it, but I don't think you'll find. I think you'll find it will put a magic number of 0. Flip short. 2 stop outs. Oh, go on. Why don't you just take my entire account? This is not the best morning to start this, is it? I'm basically throwing this account away. I've blown it. I've lost 22 grand on it yesterday on this evaluation. So I'm back down to 0.2 negative, 2% negative. So I've decided this morning just to stick a load of opening range breakouts on the 5-minute. And whichever one holds, I'm just going to let it run and see if I can get a 7 to 10R return on it. Or blow it, one or the other. I like doing that with accounts. If they annoy me, which this one has. Yeah, I don't know about the answer to that one. Let's try it. Haven't got an account I want to try that on, really. But try it. Go with a really small risk. Set the magic number. See if you can put the magic number in as blank. I've never tried this, but see if you can put the magic number in as blank. 0 is usually held for manual trades. So if you put the magic number in as 0, it might put it in as manual. Because obviously what happens on the on your trades is obviously when you hover over, it says placed by expert ID 26. If it's a manual trade, like this one, when you hover over it, it says placed manually. Now, I don't know if that placed manually text comes from the magic number 0 or whether it comes from actually using the buttons and functionality within the terminal. I'm not 100% sure on that. I've never tested it. Do a test, Diamond. Update me. Let me know. Morning, John. That'll be interesting to find out that. Sorry, I'm short on the DAX. I'm going to watch it. Let me just come over to this terminal. We can have a look at the DAX. Doing things a bit different this morning. So where we are at the moment, I like this short today because of where we are, obviously. We are up at yesterday's high. So we rallied this crazy move on the DAX yesterday for no apparent reason. This was a 15 to 1R off of the pre-market opening range. It's just nuts. Wish that happened every day. Wish this would happen today. But we pushed all the way up to there. We came down, pulled back into propulsion. We tried to break that area again, rejected. So that became yesterday's high. We collapsed down 50% retracement. Push back up towards end of day. This morning, we've opened up at this opening range. So you can see, obviously, what happened. Pre-market, the algorithms pushed up, didn't get any further above there. This morning, they've tried to push up and immediately limit orders have triggered at yesterday's high to drive it back down again. So if there's no buyers in the market today, sellers are likely to win this one out. However, if we do break the upside, we don't know where we're going because we're pretty much at highs. We've got no upside resistance, I don't think. So there's no upside resistance there. Sky's the limit. When this goes out to the upside, it's going to go wherever the hell it wants. As you can see from yesterday's breakout. But that would be my guess today, is a return and retest on this propulsion gap. See if this is actually a breakout or if this is a false breakout. If this is a false breakout, they're just going to slam straight through this. So look at it on the higher time frame. 80% of breakouts fail. Yeah. This yesterday is an attempted breakout of the range. So price discovery, we either find balance and we trade, or we fail and return to balance. So one of those two things is going to happen. We're going to retest at some point, I'd imagine, but if they're going to go for it, they're going to go for it. So could have another big ORB break to the upside today. We'll see. Indices, US indices are coming down this morning. I shall take the break, whichever way it goes. Diamond, well, I know it works that way with my own EAs, that I can have it manage the trade after it's entered manually. Yeah, you can do, yeah. Obviously, when I'm coding EAs, you've got that option to manage manual trades. But obviously mine doesn't do that because the whole purpose of EAs is that they manage their own trades, not other trades of other EAs manual. But if you want it to manage manual, you can do. But what we're interested in is when you press the button in the EA or the EA executes the order, does it execute as this is what they're looking at, right? Here, when you hover over that, it says placed manually. That means I press the button in my terminal. If you can make your EA make that text appear, they have got no way of knowing an EA's taken that trade. There are ways to force that, I think, but I'm not sure. Google it. But yeah, trying a magic number 0 or using empty magic number may well place manually, but go and try it with the Price Action Toolkit. I haven't got any accounts I can log into here that I want to try it with. I certainly don't want to try it on this one because it's Feudal Crest. It might tell me off. Stopping out and flipping long again. 1.5% loss this morning. Oh, what? No, not quite. Thinking about it. Yeah, flipped long again. %2 loss. So I need a 4R to get back to break even. Yeah, so you place trade manually, yeah. So you can obviously set, yeah, there's lots of EAs that set up to do that. Obviously, if I set the opening, the EA, any of my EAs to do that, obviously they're going to take over all trades, which is not what people want. Yeah, you could do. I could put options in there to manage all trades. It makes it overly complex. People start going, whoa, why has it suddenly started trailing my manual trades? Well, can't have it both ways. God, this is terrible today. Let's see if we can actually get a 5% loss on one 5-minute candle. Do you think that's possible? Certainly looks like it this morning, doesn't it? Right. It's not real money. I don't care. Right. Okay. So let's have a look at the. Let me just move that terminal over here just so I can keep an eye on it. We'll come back to that when it's decided it wants to actually go somewhere. So this morning, ADRs, there are none. We are flat, no ADRs again. This week's been absolutely terrible. We've had probably 3 or 4 ADRs. Just not happening. So there is no big movements this week. We've got 3 weekly ranges hit. It's yen based. It's all yen based at the moment. So CAD yen absolutely just about got its range. So did US dollar yen. New Zealand dollar yen's the only thing that's actually managed to get anything beyond its normal 100% range. So CAD yen, obviously it's Friday today. This is Monday back here. So you can see, obviously, we are 1, 2, 3, 4 days up. Highly likely we're going to get a pullback today. So some yen strength potentially. It looks like it is starting to kick in this morning. So CAD yen potential good short. You had your 15-minute reversal alert yesterday at that high, and the 5-minute was back there as well. So good looking opportunity for shorts. The initial entry potentially was there for a reversal. So back into this propulsion or back down into that propulsion. My God, look at that doji. What a nightmare today. I picked totally the wrong day to try the 5-minute pre, didn't I? Look at it. So there's your 15-minute, sorry, your 5-minute opening range. I'm currently long. I don't want to be long. I want to be short, but I'm going to give it the benefit of the doubt. I'm going to go long. I'm going to go short if it breaks back down, but it's got to go somewhere, isn't it? Can't sit there doing this for the entire session, he said, as it sits there and does it for the entire session and just drains his bank balance to 0. Okay, flipping short again. What's the loss today? Let's just have a quick look. That's only $4,000. Not the end of the world. %1.6%. Get that back on a break, if you don't mind. So yeah, CAD yen. The other one was the US dollar yen. That's already rolled over. Got 2 shorts on that already from the H1 extension on RSI. So this is again same thing. This is Monday. Little bit of a push Monday, but Tuesday, Wednesday, Thursday, looking for a pullback. So we're looking for a profit take on that move there. And New Zealand yen is the bigger of the 3. So this one's done 125 of its weekly range. Again, got 2 positions on that off the RSI extension, looking for it to drop back down. But at the moment, sideways. So yesterday was very sideways on New Zealand dollar yen. We did end with a rally in the last couple of hours, but not really gone anywhere at all today. So looking for some yen strength on those. The monthly, we've only got the 1 euro CAD. We've looked at this one multiple times because it's been there for a while. This thing is literally not moving. Compare the open today to the open yesterday. Talk about pick the wrong day to do the pre-market. I'm going to stick 2 shorts on, actually. I'm going to go double. Oh, I can't. Not enough margin. Seriously? Trade is disabled. What do you mean trade is disabled? Why is trade disabled? Lost 1.6%. What are you talking about? Beetle crest. Right. So yeah, EuroCAD. Sorry, we're looking at the EuroCAD for the week, for the monthly. So going back to beginning of May, that's back here. So there's your high. So that's your monthly range put in. We are kind of 19th of the month. So that level there is kind of where I'd be looking initially, I think, for a pullback if we're going to do a 50% retracement and continue that down leg. So opportunity there on that one as well for the monthly, but that we've looked at that. It's been sitting there doing that opportunity for days now. So we looked at it when we got kind of down to, what is the monthly on it? I can't remember. It was 507. So it's from here, basically. So bottom of this range, basically, was the monthly range. And all we've done is kind of had a couple of down days since then. So this euro is really due a pop. It's just not able to make any progress whatsoever at the moment. DAX is thinking about looking for another little short. Gonna do it. God, it's tentative today, isn't it? So this is going to be an inside bar. There's your 5-minute opening range. The 10-minute bar was an inside bar. The 15-minute bar is an inside bar of the 10-minute bar. And it's closed. So it's an inside bar on an inside bar on an inside bar. If we get another inside bar, basically the market will have to stop. That's how much volume we've got this morning. Wow. So the break to take today was the 5-minute pre-market. If you'd have taken that, you wouldn't even be in a trade yet. Oh, if only I'd known. Come on, make some move. Right, well, we'll wait for that. Got all morning, DAX, when you're ready. So there's all your ADRs, AWRs, and monthlies. RSIs, we've got nothing on the hourlies yet at all. So the hourlies are totally flat. So anything that we've had pushing, which has been very little in one direction, is retracing or accumulating at the moment. So RSIs on the hourlies are all back to within normal ranges. If you look at the US dollar yen, that was a nice double extension this week. Back now pretty much down to the 50. We are dropping fairly nicely on it. Really nice divergence on that one. So we had the sort of huge divergence, bearish divergence there. That's what I'm worried about. Last week's high, previous week's high 2 weeks ago. So that ties in very nicely with that propulsion gap at ADR. So we might actually get a move out of that. It is going to put in an inside bar, inside bar, inside bar, inside bar, inside bar. Look. If this stays within that range in the next 3 minutes, I don't know what to do with it. This thing's going to explode, isn't it? Somebody enters like 10 lots long or something, it's just going to go because there's just no volume. There's no liquidity at all in this market today. That's the weakest open I've seen. Look at that. That's a symmetrical triangle, basically. Can't even break the symmetrical triangle. I can't even zoom in long enough, close enough to make it look like a symmetrical triangle. It's that symmetrical. Terrible. Right. Anyway. What can you do? This is what happens when you're on a live TV. Since it's basically scalping, I have no other trades running. Yeah. So if you're trading in if you're trading an account and obviously you're using your own EAs to manage your own trades, it's easy. But when you've got trades that are trying to manage their own trades and other people's, it gets very complex. Morning, Brian. You've joined just as the DAX is about to break all new records by putting an inside bar in an inside bar in an inside bar inside of a bar. And if it wants to go for the world record today, in the next 2 minutes, if it can stay there for the next 1 minute 45, it's on for the world record. 5 bars, not able to break out of its previous ranges. This is the tightest contraction I've ever seen on the DAX. It just happens to be the day that I try to manually trade the 5-minute opening range break. I've got to watch this. I've never seen anything like it in my life. This is unbelievable. Is this someone's turned off Germany? We haven't had a nuclear war I've missed or anything stupid, have we? Just check the news. No. Currency strength. There isn't any. New Zealand dollar and US dollar. We had the German PPI as well at 7 o'clock this morning. We've even had news. Mental. So there it is, official. 4 inside bars on a trot. Well, 3 inside bars. 30 seconds. Nirav would be proud. Useless retail candlesticks. Yeah, I'd like to see Nirav make money out of this as well. Sorry, you need the market to move to make money. There isn't anybody on the planet that's making money right now, unless you're trading the 1 minute chart, in which case you're getting chopped to death. Oh, it ruined it. You got a new high. Okay, so we got a higher high and a higher low. Therefore, we are bullish. 9 seconds to go. We are officially bullish at the open. Everybody, long. You watch this thing collapse now at a rate of knots. I've got a long one at the moment. I'm really not confident. This is like watching paint dry. Let's do some analysis on the RSIs. Something else is moving. Let's concentrate on that. CAD Swiss. Oh, sorry. Before I do the RSI analysis, I'm just going to quickly cover oil. So the oil is just moving literally sideways. The reason I'm interested in oil is because I'm interested in the CAD movement at the moment. And obviously CAD is oil and CAD are very highly related together because it's the main export of Canada. So we are now 1, 2, 3, 4, 5, 6, 7, 8, 10 days pretty much range bound and unable to break anywhere at all. So again, oil, we're contracting. We're going to get a big movement on oil at some point soon. So it's worth watching. I was waiting for this to move off the inventory figures this week. We got that movement there. That was it. So just basically waiting. This peak formation low, higher high, higher low, looking for higher high. So the market structure is long. The market is expecting it to break long. Forecasts are long. Everything is saying long it. Demand increased by 3 million barrels per day on the last news, which was released on yesterday, I think it was. Supply has been restricted. Therefore, demand increases, supply stays the same, prices go up. We should be expecting a rally on oil. So if you are trading oil and you are looking for oil entries, at the moment, we have kind of broken ever so slightly out of this symmetrical triangle here to the upside, but really in a accumulation. So it looks like it wants to go. It's trying very, very, very hard to keep that upward channel alive. But at any point, it could obviously collapse. But it is looking good. So it looks good for buys, which looks good for the Canadian dollar. This is just amazing. Look at it. I'm not on too early, am I? We're not still in pre-market. We're not still in Asia. Somebody been mucking about my clocks? So yeah, so that's oil. So looking for longs on that if you are trading oil. RSIs, CAD Swiss, 4 hour. So these are all 4 hour RSIs. We haven't got any hourlies at all at the moment. So extended to the upside, we're in the 24.72 zone. Huge propulsion target left off the back of that, but it's part of a V-shaped recovery. So it is kind of a last chance saloon bounce, dead cat bounce, basically. So it may not get back to there for a while. However, we are running into resistance at the upside as well. So this Canadian dollar, this is why I wanted to cover oil quickly before I talked about this first one, CAD Swiss, because it's obviously Canadian dollar. So if oil prices are going to rally, the Canadian dollar is going to rally. If oil prices are just going to maintain this stupid sideways movement they seem to be in at the moment, there's no advantage there. Swiss franc is due strength along with the European moves, which we're expecting off of higher interest rates. So Swiss franc should power up. So if Canadian dollar doesn't go anywhere, the Swissy does power up. Obviously, this is going to come down. So it's a very tricky one. We are only just extended. Last time we got here, obviously, that was the short, that was the exit. Same play. If we're just going to take a small pullback on it, fine. Don't expect it to drop basically down to there at the moment. Nothing seems to have any strength at all at the moment. Market's gone back into flat mode again, unfortunately, as you can see by the RSIs and the ADRs this week. So, but it is technically RSI extension. So it's a 4 hour M5, M15 mean reversion play short. No real decent levels on it at the moment. The monthly high is obviously back up here. This is obviously going to be, yes, yesterday's high is going to be this week's high, which is a resistance there. Put those this sort of level on here, these couple of levels here. Obviously, that's where we've bounced off of. So looks like a good short. CAD yen extended. Again, 4 hour, we're above the 70 level. Again, just looking for that pullback play to start. Really nice, big, strong push, pull, big, strong push, pull, big, strong push, waiting for the profit take, putting back down towards the 24.72. So good short, M5. This is extended above the 75 level. So M15, your entry on that was yesterday up there. There was other entries on this one yesterday, but that was your last entry on M15 and retest as well. So good for shorts. Euro CAD also extended to the downside on the 4 hour. Again, this euro obviously has been very weak off the back of the interest rates. So Thursday before last, obviously we started that little collapse down. We are in a big uptrend on that. So it is bullish, and there's no reason why this shouldn't remain bullish at the moment. Based on euro interest rate increases. However, if the US are going to increase their interest rates again, it is going to drag the CAD with it. And if we do get that rally on oil, as the market is forecasting, this is going to be quite a tricky one to play because you've got a long bias against a long bias. If you look at the bias scorecard on this at the moment, on the Canadian dollar, the euro CAD is a range bound long. COT is positioned long on it, so it is still a long. Retail at the moment are all longing it, so that gives you a short bias. So at the moment it is range bound, but when retail fuck their ideas up, this turns into a +4 stroke +6 bullish. So we are looking for longs on this. From a levels perspective, we've just broken back down below previous month's low. So if this is going to be a false breakout a la that one, then we'll be looking for that sort of movement. So it's ripe, ready to go. Had a big, strong drop. We literally put a flag break in. We didn't do any kind of profit take move on it. So this entire move here, you can class as one big, strong sell move. So if you stick a fib on this from the high to the low, your retracement back to 38, which is a shallow retracement, is going to be all the way back up to there, which brings you back up into the 24 moving average as well. So that's where I'll be looking, pushing back up into that level there. So it looks good for longs, Euro CAD, but just not going anywhere at the moment. No Euro strength. Euro US dollar, same thing as the US dollar Euro CAD. Big strong push down. So you can see obviously we've been in a bull run on this. We do tap down We have tapped down below the 72 previously on this move up. Made a new high, only just. We're coming back down into resistance and support levels now. Nicely extended, really extended. We've looked at this one. When you get down to these sorts of levels, it's virtually impossible for the market to maintain because it has to have a profit take move. So we've got one coming. Stopped out long, flipped short, DAX. My God, this thing today. Right, short. Proper short. Oh, you won't let me add any volume. I've got no margin. Right, we're short the DAX. I can't even use stop losses. Why is trading disabled? Sorry, I just need to check my Fidelcrest account. One sec. I'm nowhere near limits, but trading's disabled. Active. Failed? Why? That's why trading's disabled. Daily loss, 5%. Max loss, daily loss threshold, 227,000. Sitting on 240. What? Daily starting equity, 238,980. No, my current equity is 240 grand. What are you talking about? Oh my God. I'm losing the will to live with Fidelcrest. I really am. Yeah. Blown. So I'll have a look at that later. Math doesn't add up. It says I started the day on 238 grand. I've got 240 grand in the account. Anywho, so yeah, something wrong with Fidelcrest's maths. Euro CAD. Sorry, Euro US dollar. Go back to this. Proper trading. So yeah, looking for longs on this one. Big, strong drop, Euro US dollar. If you look at it on the, on the hourly. Sorry, one. Hourly. We've had a big, strong drop on this. Very nice market structure on the way down. Kind of textbook market structure, really. Possible continuation. However, I would expect it at least to pull back up into that weekly low there, which is 2 weeks ago's low. We came back, retested it, we retested it, we finally broke it, retested it and dropped. So this is where we'll be looking as a target to the upside, that propulsion gap. Yeah, so this is a prime example of why the propulsion gap works. We have a support, support, support. We have an accumulation, and then we have a strong move to break that support level. We can't come back up and fill the gap because there's too many sellers on the breakout. It's a proper breakout. Yeah, so when we come back up, that's where we usually will head to, the propulsion gap. So like it as a long, very nice extension on the hourly from yesterday in one, as you can see there. H4 really extended. Again, when we get down to these levels, these extensions, the market needs a pull. It needs a profit take. It can't just keep going down because to sell, you have to have people wanting to buy on the other side. When everybody's run over to such an extent that they literally cannot buy anymore because they're either lost their account or they've completely lost faith in the move they're trying to do, there's nobody left when you're selling to buy from. So when the buyers dry up, you can't sell anymore. You have to take profit on the move that you've got. So for the banks, for us, it's a case of when we get into a trade, we get out when we want to, think is a good level, like the amount of money we have. With the banks, they get out when they literally can't move it anymore, because if they're short, they're making a fortune, and they'll keep making a fortune until literally there's no one that goes, I'm not that stupid, mate. And they go, all right, fine. That's why the profit take happens. So this is why we use the RSI. It measures that movement. So we're just waiting for that profit take to kick in for the euro US dollar. Again, we really need some help from the euro at the moment. It's just not got that oomph. And the US dollar's just had positive after positive after positive news. So it's coming down. But it will go back up. So good entry opportunity, euro US dollar. That's nicely extended above the below the 25. Pound CAD extended as well. Nice extension there on the 4 hour. Again, Canadian dollar, US dollar had a good run with the US, the CAD. Oil prices expected to rise. Not that convinced because they've said that many times before. But if we are going to continue market structure, if we're going to continue this trend, the 2472 area is where we usually start the next legs from, exactly where we are. 4 hour RSI extension, all lines up nicely. If you look at the fundamentals for the pound CAD, it's exactly the same as the euro CAD. Pot positioning is long. Retail at the moment are all long on it. Therefore, all long on it. So it's a short at the moment. So when the retail side flips, this is going to turn into a plus 4 to 6. Exactly the same as the euro CAD. That's not. Yeah, it is. Sorry. So all good. Pound CAD looks good for long opportunities as well. New Zealand dollar yen. We've covered this one already off of the weekly, but yeah, big, strong push on this. Nice extension again. So again, same as this. Profit take move, just waiting. This is beautiful at the moment. It's just so nice and orderly. Continuation from the 2472 area. Thanks for the follow, Raheel. Welcome aboard. So yeah, New Zealand dollar yen, good opportunity. Pushing at the moment. Looks like we got weak yen. No, this looks like New Zealand dollar, actually. Strong New Zealand dollar, look. This market this morning is bizarre. Got strong New Zealand dollar in the London session. It was asleep during Asia. Things are not making sense. Look at this thing. 5 minute opening range, right? Normal offset is 1.5 pips, right? We got a 0.5 pip move below the 5 minute opening range. So you're not even triggered short yet if you're trading the 5 minute opening range break. This thing's just nuts today. Look at it. Oh, you wait. Someone's going to drop a bomb on this in a minute and it's just going to fly. You want to be on it. It's almost worth starting a new evaluation just to take the 5 minute opening range break today because it's probably going to be a biggie. New Zealand dollar yen. So yeah, all these New Zealand dollars are having a nice little rally at the moment. So pushing up at the minute. This hasn't had one profit take move on it at all. Solid straight up. So a little bit of drawdown control, as you can see, done on this one yesterday from first position taken. A little bit of DD control up at the highs there. Second entry on. Break evens there. So, you know, any kind of move down, half an ADR, 3/4 of an ADR, back in profit. So just waiting for some movement. US dollar Swiss also extended. This is all coming down so far this morning. So we're pulling back at the moment on the trend. So this is obviously the trend pullback. Potentially for another short. Inclined to think it's more sideways to short US until they come out and say they're going to put more interest rate rises. Euro should be pumping. Swiss should pump with it. Therefore, this still looks like a good short to me. Very nice place to get in up here. So, yeah, like that as a short. H1, just about got a little extension there, but it was quite quick in and out. So it didn't trigger an entry on that one on the 5 minute because it was a push up, push down. So the trigger on M5 would have been triggered before you got a closed candle reading on that. So didn't quite get into that one. Straight out of that propulsion gap. Nice entry though. But we have just broken to the upside now, obviously. So this huge range that we've been in for 3 weeks or so, has just broken to the upside. So there is potential maybe for this to drive. It's going to need the US dollar, the euro and the Swiss franc to remain weak. And it's going to need some sustained strength on the US, which I just don't think we're going to get. So it's more likely, I think, that we're going to return back into a range. We might have a little bit of a higher range form, but I don't think we're going to scream in any direction. Aussie, Euro New Zealand's just hit its weekly range. US dollar Swiss. So Euro New Zealand weekly. So there's Monday. So there's a weekly range hit. Back down at support. Really good looking opportunity for a long there. You've also got your monthly here. So you've got two really nice levels of support, creating a support range there, encompassing ADR. Very nice long. Pound New Zealand as well. So this New Zealand dollar's going nuts. Bank of Australia have just said something. OPEC is Bank of America, sorry, Australia. I was watching New Zealand thinking, what's the Aussie up to? OPEC is likely to take more barrels out of the market. Again, bullish CAD, bullish oil. Are there any traders actually awake today? We are short. Officially, you are triggered short on the 5-minute or 15-minute opening range, whichever one you decide to take. There you go, short. Wow, what a reaction. Markets, I've never seen the market this slow before. It's ridiculous. So there you go. Another, you got some weeklies hit on these New Zealand. So New Zealand's the only thing moving today. Literally, New Zealand is the only thing is moving. So US dollar Swiss, we covered US dollar yen finally on the 4-hour. That is extended. Just rolling over nicely. Got two positions on that on the H1. So first H1 RSI extension was there. Got really, really embedded on the 4-hour look. This move hasn't had a profit take. So it's literally a push, flag, break. This is your second flag. Watch this area here. So this is the danger area today that we come back down and just retest that previous week's high and pop off of it. I don't think it will. I think it will come down deeper than that. So typically a profit take move is at least a 38 retracement. That's a shallow pullback, medium, deep, which is the deep pullbacks come back down to the 24. So it's more likely we are going to get a drop, but we're going to need some yen strength as well. So there you go. There are your RSI extensions. Five, 10, 15, 20, 25, 30, 35, 40. 40 minutes sideways. 40 minutes at the open. Look at this thing. You have to say, it's very much looking like a yesterday's high rejection, isn't it? That was their attempt to break yesterday's high. Limit orders immediately just went, nope, you're not having that. They didn't even bother to push back. So I'd got to be saying short, haven't you? Short of the century at the moment from there. But yeah, good luck with that this morning. I've got other things to do. I'm not getting interested. Right, let's catch up on the chat. So that's all the analysis done. Morning, Alan. Euro New Zealand. I'm still long. Yeah, you will be. Euro New Zealand's coming down still. Well, say you will be. If you didn't get out on the pullback, then yeah. So double bottom right now. If you're looking for aggressive drawdown control spots, this is it. So you've got two ways to enact aggressive drawdown control here. We've got these two levels, this one here and your monthly. So, and ADR. So drop down M5, wait for a reversal alert on this. So that's going to be there. That's your first reversal alert. So as soon as you get that entry in, you can take an aggressive, if you need to. I don't know if you need to take aggressive drawdown control or not, but if you do, this is the time to do it. So you've got this level here. You've got two options for placing your stop loss. So you can get in there, go with a tight one. So that would be a very nice, very low risk entry. If that fails, then it's going to push down and test last month's low. You're going to get limit triggers down there as well. So you can take a second entry there with a stop below there. If you want to take that entry there on this one and then put your stop down there, you can do. Obviously, it's up to you depending on what that risk is going to be. You've also got ADR here to back you up as well. So we are putting in our average daily range already at the beginning of the London session. So there's a high probability of a bounce, isn't there, for this level? So good spot if you need it for aggressive drawdown control, depending on how aggressive you want to be. Obviously, you can take the 15-minute, which is going to get you in there. The 5 is going to get you in somewhere around there. But good support resistance, targets galore to the upside on the hourly, isn't there? I mean, it's just a mess of propulsion moves to the downside. So we have, but this is where I got out. So if you look at this retracement, you know, when I keep saying pullbacks, profit take moves tend to be 38s to 50s. Yeah. There's your 50. You should have been able to get out on that. I got out here without aggressive drawdown control. This was just a standard entry. This was just 1, 2, 3. Sorry. That was, oh yeah, sorry, I took a manual, didn't I? So the entries here are that one there, and that one there. And they all exited there. So the EA got out there. I took a little manual there because I wasn't sure if the EA was going to get me in, because it was borderline on distance of 0.75 ADR. So I got out of that manually as well. So that doesn't, not in the equation of the move. But you got plenty more out of that. So it should have been an exit. How do you put an RSI 14 on a 4-hour chart and an RSI 21 on a 1-hour chart on the same chart? It's magic. I could tell you, John, but I'd have to kill you. It's a trade secret. It's the secret sauce that makes me a successful trader. I will let you have that information for $1,000, and it best be the best course you've ever had in your life. PayPal me in Telegram. All you do is you put 2. This is a trick. It's a little known fact that you can stack indicators of the same type. People don't realize it, but there's no reason why you would if you think about it. But all you do is you put 2 RSIs on your chart. Yeah. One of them you set up for 14. The other one you set up for 21. In visualization tab, you set this one, which is the 21, to appear only on the 1 hour, 30 and below. The other one is visualized only to appear on the 4 hour and the daily. For me, you can have it on obviously anything you like, but all you do is you just say, when I'm looking at a 4 hour chart, show this one. When I'm looking at a 1 hour chart, show that one, or vice versa, whichever it is. So when you flick, like I'm on the hourly chart now, the 4 hour, it flicks over to the other RSI. So all it's doing is it's hiding, it's showing this one now, and it's hiding that one because it shouldn't appear on the 4 hour chart. Yeah, so it's just a visualization. Very simple. Morning, Steve. You could say that these have all been inside bars as they've closed within the previous candle range. Yeah, it's just... I haven't seen the DAX do this for... I don't think I've ever seen the DAX do this. It has to be the bloody day that I tried to do pre-market 5 manually of all times. If I'd have done it with the EA, it wouldn't be a problem. But yeah. I need to go and do some maths as well for Fidelcrest, because as far as they're concerned, their reporting statistics show that my current open equity is higher than my starting equity today. Therefore, they've blown the account. I think there's a maths problem from yesterday because I hit 4.97% drawdown before I closed my positions out yesterday. So I think maybe there's a miscalculation there. And actually, it was a blown account from yesterday. But We'll see. Anyway, have you ever ran any data on trailing stops using ADR, say full half quarter? No, but you can do. Can do, yeah. At the end of the day, any trailing stop you use within ADR is going to get stopped out. Yeah, think about what ADR is, the average daily range. So we know that price moves up and down within its average daily range. So yesterday, just on the Euro New Zealand, look at this thing, we moved 95 pips. ADR on it is 128. So yesterday we did 74% of the average daily range, up and down. So 3/4 of an ADR, basically. So yesterday we moved 3/4 of an ADR. We know that because we know we spend 58% of the time within ADR. So if you set a trading stop after something is moved anywhere within an ADR, and it does that, as it does, market structure on the way down, unorderly, random, you're going to get stopped out. Trading stops stop out. All trading stops stop out. That's the purpose of them. You're telling the market to get you out on a pullback. Why would you want to get out on a pullback? If we know that market structure happens and we know it's going to pull back, why would you want to get out on your way to the profit? Just get out when you got your profit. Any type of stop is going to get you out of the market with less than you have potential to make. Either it's going to be a loss guaranteed or it's going to be less profit than if you'd let it run. It's for protecting your capital, but it does protect your capital, but it reduces your profit, which is why everybody that uses trading stops with any type of strategy that uses a risk-reward multiplier as the edge fails, because your trading stop will reduce your risk-reward average, meaning the strategy edge is lost. That's why I don't use trading stops, because they just don't work. Break-even stops, same thing. Market structure means, by its definition, when you get a break and it pushes down, it comes and retests the previous level. If you enter on a break and you move your stop to break even, you will get broken even before it goes and hits your target. Stop losses. Stop losses are stop losses. Whether you trail them or you don't trail them, they are in order to get you out of the market with less than you should achieve. That's literally all they do. Don't use them. The only time I ever use a stop loss is if I'm scalping or manually trading and I'm really close to a level I think it's going to bounce at. If I'm short here, I will stick a trailer on. If we slam that level and the limit orders don't fire and they put a load of sell volume in to try and break a level and they don't find they get those limit orders trigger and fire against them, we get a pop. If that pop happens, my trailer takes me into more profit than I was expecting to get. If that pop happens and that break happens, I get out exactly where I thought it was going to bounce and I win. But my trailers are set tight because I want to get out. Every time I put a trailing stop, so let's say, for example, Euro New Zealand, I'm short now. I drop down to M5 and I'll look at it and I'll go, right, we hit that level. My trailing stop is going here. 230, so 23 pips. So I put a 23 pip trailer on it. So if it slams that level and goes for the monthly, fine. Give me more. I'm expecting you to get me out. I'm happy with my profit. Whenever you enter a trailing stop on a trade, you have to say, I'm happy with my profit. You have to have a big enough profit there to give your strategy its edge. So if you're running a trade strategy where you have a 1.5R return, 1.5 to 1, right? And you've got a trade which has worked very well for you. You're sitting at 1.75R at the moment where you are. Put your trading stop at 1.5, but make sure that edge is intact before you enter a trading stop. Because if you don't, what's going to happen is if you're entering here, for example, and your trade goes into profit and you get to 1R and you put a trailing stop there to go, hopefully we get a runner. when that comes down and takes you out of break even, your edge is gone. You've lost it. That winning trade is turned into a break even trade. It should have been a winning trade. You lose it. ORB 5 minute is, sorry, that's pre-market 15. ORB short on the 5 minute break today is on its way to stopping you out and flipping you long. Nightmare this morning with DAX, just terrible. So yeah, just don't use them. Is my I have done tests on it. So actually, to answer your question, Brian, have I ever done run any data on trading stops? I have, yes. That's why I don't use them. But I haven't done it with the ORB EA or with the MRA EA or anything like that. It's previous analysis I did. And it was part of my analysis into should I, shouldn't I use a stop loss? And in what case, what scenarios should I or shouldn't I use a stop loss? And the result came out as if you use a stop loss, you're just going to lose. So I don't. Have I heard of Alpha Capital, Keith? Don't think so. Rings a bell. Yes, they are 8 cap, aren't they? Are they not an 8 cap broker? Oh no, ACG Markets. In-house. No, not heard of these. I've kind of seen them. I don't know why. They probably advertised to me, but commission free. That's good. Yeah, looks good. Don't use MT4. There's always a reason. There you go. So if I've looked at someone and they haven't made it onto my list here, there's a reason, and for them it's MT5. So, but they look good otherwise. If you're happy with MT5, they look good. They're $2, so it's exactly the same as my Forex funds. They've got 5 extra calendar days, which is hit and miss, and they're $2 cheaper. So yeah, profit split's pretty much the same. Yeah, I don't know how long they've been around. Let's find out. October 2022, they launched. So they're what? Where are we? May, October, November, December. So they're 8 months old. Will they still be here in 8 months? Don't know. But yeah, look all right financially. From a just MT5 only. That's the only thing. That's why I wouldn't use them. Assume they allow EAs. Check. Another good thing to do is go and join their Discord channel as well. If there's like 500 people milling about, there's tens of thousands like there is with the big guys, then yeah, you know you're onto a winner, don't you? Okay, opening range breakout. You have stopped out short, flip long. Good luck. We are now at highs. This is highs for a long time. Let's have a look. When was the last time we were up here on the DAX? Oh, look at this. This is a nasty level. Right, ADR today on the DAX is October's high, 2021. So this is your 2-year high we are approaching. This is why it's right. This makes sense. Now, this makes sense. I didn't look at this yesterday. You can't see, can you? Because my big head's in the way. Let me move my big head. That is your high from October 21. So it makes sense now. Yesterday, I was like, why on earth did that thing fly like crazy yesterday? They're reaching for this level to retest it. So that's where we're off to. So watch that. And it happens to fall almost exactly to the pip. No, a little bit shy of ADR. Yeah, so somewhere around here is the short entry. And you might get a very violent reaction off of that as we get a load of people coming and sell at that level. So watch that level on the DAX. That's where we're headed to. With obviously very low volume as well. So if there is a lot of limit orders sitting out there, I mean, it's an old level, very old level, but the market will be watching it. There's limit orders sitting there. That thing's going to come down fast. If there is, we don't know. We'll find out when we get there. There you go. That's why we had that rally yesterday. We're reaching for the previous highs. Morning, Michael. GJ is dropping. Yeah. It is. Very nice. We're coming down into yesterday's low, though, which is possibly support, which is a previous monthly level as well. So we'll see. But all these yen pairs at the moment, we've got a little bit of yen strength coming through this morning, not masses. The Aussies and the New Zealands are doing well, but little bit of yen strength. But there's very little movement in the market today. Pound's coming down. But Pound and New Zealand seems to be the one today. So you'll find Pound New Zealand will be your biggest mover so far. Probably the only thing that's going to hit ADR today. Pound New Zealand, RSI alert. There we go. Timing. Euro New Zealand and Pound New Zealand. Both hourly RSI extensions now. Good opportunities for longs. Great filibuster. Morning. I am short Aussie New Zealand. Been in since midday California time. Okay. Good one. I don't know what to say to that. GJ should be dropping to 169. Why should it? What relevance has 169 got? Seems like a number picked at random, but anyway. I wonder if Fidel considers overnight spreads into their equity, their daily loss equation. Yes, Brian. I think you might be right. I think you've hit the nail on the head there. Overnight spreads, swaps, basically. No. Oh, yeah. Hang on. Oh, blimey. Yes. Quite possibly, yeah. Yeah, I think you might be right. Anyway. No D40 movement because it was a holiday yesterday and everyone taking a long weekend. No, it was a holiday yesterday, Jeffrey, as you said. Yesterday was a holiday on the DAX, but it wasn't. Oh, right. So you're saying people have taken today off as well? Yes, possibly. Although then why did that happen? The banks are still open. People still need to transact. So I don't know. It's just very, very quiet open. It's very bizarre this morning. I suspect it's more likely they're running for that level. Morning, Kennelly. Jeffrey, but were the banks still open? Yeah, they were. How about Funded Trading Plus? Yes, MT5 trying a trial. Funded Trading Plus. You mean the computer game? Oh no, that's a different one, isn't it? Yeah, these guys. No, these are E8 broker, 8cap rather. And this is run. I said anybody can become an 8cap prop firm. I can set up this afternoon as a prop firm. The guys that run this run a signal channel. Anybody can do this. Anybody. I can't remember the name of the company, but there's a basically they sell courses, they offer signals. They set themselves up as a prop firm for the people that all the guys that sell stuff, like all the guys that sell these courses that cost thousands and thousands of pounds, these channels that you subscribe to, which cost you $200, $300 a month, all that sort of stuff. They're all looking for income from people looking to learn Forex, which is fine. Yeah, giving their information away for a price. That's what we do. We learn that way. I'm much more of a believer in getting paid for what I do if people find it valuable. You don't know if you find anything valuable until you've done it. Yeah, because there's 1,000 courses out there, and at the end of the day, you can do them all. They'll all teach you pretty much the same thing. So all you're going to do is spend thousands and thousands and thousands. What I teach is all for free. If you like what I teach, I've developed indicators and EAs that will help you automate or semi-automate that process. So I only get paid for what I do online by people that find it valuable. These guys that have the course, sell the signal service channel, have added another income stream to themselves by starting up their own prop firm. So everybody they sign up, they push through Funded Trading Plus. It's just another revenue stream. This is what prop is. It's basically they're selling demo accounts at the end of the day. You're paying $500 for a demo account. They're free. So, and they're using 8cap. Like I said, I can do this tomorrow. I could be set up this weekend as a prop firm, and I can come back here on Monday and go, hi, everybody. I've decided that the best prop firm in the world is LeeProp. Go and join LeeProp. I'm going to sell everything for $50 cheaper than my Forex funds because they make $20 million a month in evaluations. So I might as well have a bit of it. Selling the dream, exactly as Diamonds just said. I live the dream and show people how I live the dream. If you like what I do, you have an option to buy something that helps you live the dream the way that I do. You don't have to do it. This is why I say in the bootcamp, everything I teach in the bootcamp, you can manually trade. And I manually traded it for years. I just happen to develop tools that help. And that's what I sell. And I make a second income out of it. It's great. But it's not my income. These guys' income isn't trading. These guys' income is prop, selling signals, selling courses. Different. It's the old those who can't teach analogy. Yeah, those that can do, those that can't teach. This is what this Funded Trading Plus is, and they use 8cap. So just steer clear. That's why they're not on my list, because they're 8cap. The only people that made it onto my list in 8cap is Surge Trader. And the reason they're on the list is because their audition package is 365 days. So it's really good for position trading. Position trading, you don't really need fast execution. So the 8cap issue with execution time doesn't become an issue. That's why they're on here. They're reasonably priced. They've got $1 million account. Not that I would ever say go for $1 million. You just don't need it. But the 365 thing is a good selling point. There's no leverage. It's 1 to 10. So you've got to use tiny position sizing. So again, position trading, it's not very good. For scalping, it's great. And it's only one phase, but they're more expensive than everybody else. So I mean, this is why I built the comparison, because every time you look at a prop firm, there's always something wrong with them. So if you pick the stuff that's important to you, I have to have EAs. They are important. I have to have one where they do not require stops, and they've got to be able to offer me MT4. You see the list gets smaller, right? These are the guys that I can look at. This is why I've built this, so that you can easily go, and every time you find another prop firm, you can come here, do this filter and go, right, I'm going to take 100K evaluation. What's the cheapest? I know it is. It's my Forex funds, which is why I use my Forex funds, because you can't beat them. So whenever you find anybody that matches the same criteria that you've just found on a new prop firm, come back here. Are they cheaper than my Forex funds? If not, go and use my Forex funds. They're cheaper. It's price. At the end of the day, you save yourself 50 quid. You do five evaluations. You're 250 quid lighter. That's all you've got to do. Look at it that way. They're all doing the same thing. They're selling you a demo account with the dream of making £1 million. What is the drawdown on an individual trade at which you start aggressive drawdown control? Round about, it varies. 2 to 3% is when I start thinking need to do aggressive. But that depends on this as well. Again, it's exactly what I say in the bootcamp. When I do aggressive drawdown control, isn't dependent on any particular situation or any particular instrument or any particular scenario. It's dependent on whether I think this is the right time to do aggressive drawdown control. If I've got something that is sort of like 2.5% in drawdown, and it's hitting a monthly and a weekly level. Look at Euro New Zealand, for example. So that one we just covered this morning is a prime example. Yeah. We've got a monthly level. We've got ADR. We've got 2 weekly levels right bang next to each other. If it's going to bounce, it's going to bounce in this area. So this is where I do aggressive drawdown control if I had something like 2.5% drawdown. However, if I was in 1.75% drawdown on it and I saw this, I might consider, if I only had 3 positions on in 1.75, I might consider doing aggressive drawdown control there because it looks bloody good. It's a stop loss entry trade and there's a high probability of a bounce. We've got propulsion gap targets to the upside. There's confluence all over the place. RSI is extended. It just looks great. So if I wasn't in pain and I had hardly any on, but I saw that, I might consider it. If I've banked 18% for the month and I'm sitting in 0.8% of drawdown though, no. If I'm sitting in 4 to 5% of drawdown in total and half of it is made up with one trade at 2.5%, I probably wouldn't do it either. I'd wait for this to bounce. But again, where's my average? If my average is at 225 ADR because we've had a slam, 3 ADRs on the trot and I haven't managed to get any positions on, my trades are so far spaced apart that my average is absolutely miles away beyond 2 ADR, I'll get in aggressive. If I'm in 2.5% of drawdown and my average is sitting at 125% ADR, I probably won't. Again, there's too many factors for anybody to have a set of rules for when you get aggressive on trades that aren't going your way. There's too many things that can come into the equation. Having an amazing month and sitting in 5% of drawdown is a case of, shut the whole lot out and I'll just take 12% this month. How many traders would snap your arm off for 12% profit in a month? Most of them make a loss every month. Yeah. So you make your own choice. If I'm in 15% of drawdown, it means I've got multiple squeezes happening at the same time. I'll be doing aggressive drawdown control all over the place and focused. You see me go focused every now and again. Not often, but I'll be like short streams, monitoring like a hawk, watching the hourly chart literally every 30 minutes. I'm going, need to see what's going on by the minute because I'm in a squeeze. If I'm not in a squeeze, I'm off doing other things. So there is no answer to it. But for me, if something, just from experience, if something is getting 3% in drawdown, I mean, there isn't anything at the moment, but Euro US dollar here, for example, is in 4 positions in 1.76. But this is a hedge. So let's look at H4, see if there's any H4s. 1.37 euro CAD. Let's have a look at that. Yeah, so this is in drawdown. We've got so look at the average. Yeah, it's in 1.74 or something, was it? Drawdown, something like that. But look at the average. Look at where the average is. Look at the spacing on the positions. It's been really orderly. It's just been coming down for 5 days on the trot. It's just orderly, moving normally. At some point, it's going to probably go orderly the other way, or we're going to get a news event that's going to spike. So we're going to come down like that and pop. There's going to be a profit take move on it. My average is ADR. Yeah, we know that 42% of the time ADR gets breached. So I have a 40% chance today it's going to do that. If not, Monday, there's a 40% chance it's going to do that. If not, Tuesday, it's a 40% chance it's going to do that. All the time my average is within reach. I don't mind if I'm in 2.7% of drawdown. If I'm easily out, I'm easily out. If it squeezes suddenly and my average then jumps up to 1.75, then I will enact a drawdown control on it. But as long as you're doing drawdown control on the way, you should be able to keep your average in there. And you do drawdown control using the profits of other trades. Yeah. So every single day on this account, let's look at the H1M5 actually as a better example. Actually, no, let's look at this one. Virtually every day we've been banking, right? So banked 1.8, 1.5, 0.28, whatever we've banked previously. We've banked 12.29% this month on the H4, M5, M15 mean reversion strategy. We got 2.8 in drawdown. Half of that is made up of one trade on the EuroCAD at 1.3. Yeah. But every single day in here, this is the P&L look. Every single day, there's negatives. 78 loss, 200 loss, 100 loss, 100 loss, 100 loss, 200, hundreds, hundreds. But if you go back on all the winning days as well, so looking at the 16th and the 15th, so this is the 16th here. So 16th, we took a loss. 15th, took loss, took loss, took loss, took loss. Let's go back to the 12th, but yeah. So, you know, we're taking losses all the time, but because we're banking profit all the time, we're coming out with a net positive. And all it's doing is it's keeping all this drawdown under control to a certain extent. It's only when you get a massive squeeze, so this is going to be sitting up at 4, 5, 6 positions and suddenly in a pain, that's when you get involved. But if this was sitting at 2% right now, fine. What's the worst case scenario? I go, screw it. I've been in that for 2.5 weeks. It's 2%. I just had enough of it. Shut it. I'll take 10% this month. This is why I use 3%, because I know that easily I can bank 10 to 15% a month. On a bad month, 5. If I get something in 3%, I know that my end result is going to be somewhere above 10, 15%, hopefully this month. So if I get to 3%, I've always got the option just to shut the bloody thing and get rid of it. Knowing that I might only make 7, 8, 9, 10% this month instead of 15, 20. And this is why there's no rule. There is no way of saying, I will do it at this level. Set yourself a level and make it stick. I used to use 2%. And what I found was every time I do the aggressive drawdown control, it would be a loss, a loss, a loss. And I'd be, I've lost 1.5%. And then it would just come back. And I'd be like, well, if I hadn't have bothered and waited and it had gone into 2.5%, I wouldn't have taken that 1.5% loss. And I just end up making losses for losses' sake rather than letting it play out. We know it plays out. This is why I use the RSI and the strategy, because you know it's going to play out. It always does. It has to. Look at this mountain range here. It's lovely, isn't it? Very pretty. Sun up there. Sorry, I'm turning into that bloke with the big hair. Bob something, wasn't it? But yeah, if this causes you 1.9%, you would have had an exit there, and there. If you'd have started doing aggressive positions on the way up, you'd have get hurt. I just learned from experience that if you get in with 0.25% risk over half an ADR of movement, and you space your entries half to 3/4 plus away from each other, it will be rare that you will get above a 3% drawdown. And when you do, if you do, you deal with it. But the amount of money you will have banked along the way far outweighs the problem that you get into. And if you only banked 5% a month over a period of a year, you're returning 60% a year. If something gets into 5% of drawdown on your account, one instrument, and you close that out, you still only made 55% this year. Again, how many traders are going to rip your arm off for a return of 55% on their account a year? Everybody's making a loss. 98% of traders don't make money. You can make 5% a month. That's it. Stick 5% return a month on a $250,000 account, or a $500,000 account, or $100,000 account, or even a 50K account. There's a lot of holidays paid for, isn't it? That's the way you got to look at it. But you've got to have the capital, and that's what I say. What's the minimum balance you can start this strategy with? What do you want to live on? If you want to live on $3,000 a month, and you're going to return 10% return on your account a month, you need a minimum starting balance of £30,000, whatever. If you need to earn 10 grand a month, you need a 100 grand account. You're not going to make it on $1,000. It's not going to happen. Not in any strategy, in any way, shape, or form. It's just not possible. There you go. That's your opening range breakout to the upside today. That was your opening range breakout to the downside. What a hideous mess. I hope the NASDAQ's not like this afternoon. Isn't it obvious? It should drop to 169 because that's where my take profit lies. Yes, exactly. There's absolutely no reason why it won't get there, because that's where your TP is. You watch now. You watch this drop to 169. Monday, Tuesday, if it does, remind me. And I shall remind you of the laws of randomness. John, I have no sound. Turn it up. I see. I've seen your comparison chart. What's your last word? Word. I don't know. My last word? I don't know what you mean. I'm thinking about it. I can't understand what you're talking about. Love the knowledge you drop. Makes me want to try your bootcamp at some point. But it's so different from my current system. I'm scared to shift. Don't shift. Stay where you are. If it's working, don't get me wrong. The position trading bootcamp is fantastic. But there are a lot of traders out there that make money with stop losses. I'm not saying in the position trading bootcamp, this is the way to make money out of the markets. I'm saying this is a way I make money out of the markets, because my psychology cannot withstand constantly stopping out and losing trades. Every problem personally I have as a trader, and I believe 95% of traders have, is caused by trying to time the market, and you are using a stop loss to time the market. Remove the stop loss, remove the timing, you suddenly become profitable. There's a lot of people out there and a lot of strategies out there that work very well with stop losses, and I've traded them. I was profitable. I made myself profitable using a stop loss. However, I hated it. It drove me nuts and it was uncomfortable. So if you've got a stop loss strategy that you are profitable with, carry on. You've made it. You've cracked it. The purpose of this job is to make money. If you've got a stop loss strategy that makes money, don't deviate. You've found it. You found your holy grail. what the problem is when people get that strategy, and this is what I fell into, the trap of system hopping, which is why I did a video on it. I found a strategy that made me profitable, didn't make me profitable enough. So I went hopping for something that was better, lost my way, and ended up 5 years blowing more accounts. Then I came back and went, hang on a minute, I was profitable. Where did I go wrong? Oh, it's because I went off trading all this crap. Maybe that's all you can make out of it. I discovered that was all you could make out of it. So I looked for another way to make money in a more comfortable way, and that's what I do. But if you want to do the bootcamp, do the bootcamp as well. Run 2 accounts, 2 strategies. That one, switch yourself off to the bootcamp. That one, switch yourself off to stop losses. Yeah, if you've got a successful stop loss strategy, don't break it. But there is another way. Very, very hard to find a stop loss strategy that you can trade consistently, which is why I stopped, because all the back testing I did on all strategies that use a stop loss all had a long-term failure rate. None of them had a long-term edge, apart from Larry Williams stuff. Doesn't use a stop loss. But it's all daily. I can make daily strategies until the cows come home. They're all profitable and they all use a stop loss. But without £1 million in the bank, I can't make enough money out of those to pay the mortgage. So I have to drop down to smaller time frames with higher, faster movement. That's when all the stop loss strategies I've experienced fail. When you look at H1 and below, or H4, really on a lot of these, all the dailies I converted to H4 failed. And the reason they failed is because of ADR. Because the banks move within daily ranges. As soon as you drop from that average daily range where you can safely put stops, and you have to come intraday where your stops have to move within the average daily range, every daily strategy falls over and fails, which is why you can't convert high time frame strategies to low time frame. They just don't work because the market movement is 100% flip side different. This is why ADR exists. This is why I researched ADR so thoroughly, because there is a percentage chance of the market staying within a range which gives a daily strategy an edge. Think about it. 58% of the time, the market stays within its average daily range. If you are trading a daily strategy, your stop is always outside of the average daily range. You have a 58% edge. If you took at random a long and a short with a daily high and low stop, laws of averages say you're going to have a 58% strike rate. But your stop is so far away, and with your risk being so far away, your profit is so small on the trades, unless you have a mammoth account, you're just not going to be able to return enough income to make it work. Prop. Why do you think Prop have a 30-day limit on most of their accounts? Because they know that if you're running a daily strategy, you're not going to get enough entries and trades to hit target within that. Because you've got a failure rate as well. Again, you get 42% of your trades are definitely going to lose. Yeah. If you get 4 losing trades in a row with 1%, you're going to find it very hard to get that 4% back and make 8% to 10% on top of it, i.e. return 14% in 30 days. Strategies don't do that. If they did, the banks would do it. They don't, because they can't. It doesn't work. This is all the stuff I've just learned over the years because I've tried everything. So if you've got a strategy that works, though, keep it. But what I would say is try and automate it and backtest it over a period of time longer than 3 years. See if that edge is still there over COVID, over the Ukraine war, and over really crap tight market conditions like we've had this week. If it works across all of those and it's consistent, don't change it. You've done it. And your brain is obviously wired to take losses comfortably. Most people's aren't. We're just not, human beings are not wired to take loss. This is why everybody fails in trading. We're not wired. We're wired to get even. So fight or flight. When we lose, we fight. When we fight, we increase risk. When we increase risk, the market kicks us in the arse and loses again. That makes us more cross. It's that never-ending spiral of increasing your risk until you blow your account. Or hop into a strategy and trying to get that 10% back. With a strategy you've never traded before, don't know, therefore has a high failure rate, therefore loses you more money, which makes you want to get more back, and you repeat and blow your account. What happens? Do you think we could use TradingView instead of MetaTrader for analysis, such as the boxes? You want to, yeah. I don't develop for a trading view. I'm happy in MT4, but you could use anything for analysis. Does your EA place stop limit orders to enter? Or does it place market order when it triggers? I don't know which EA you're talking about, Tim. I've got two. One is market reverse alerts is execution. So when you get the signal, it enters a trade at market. You can use a pending order with it. Opening range breakout uses pending orders for breakouts. New Zealand dollar yen is doing my head in. It's extended and it's got bearish divergence. I would say it's soon to undo your heading. Are you on 74, 25 and 21? 75, 25, yeah, on 21, on H1M5, yeah. Keith, for choice of prop, all right, sorry, yeah, so what's my final word for choice of prop? Yeah, it's got to be my Forex funds. But that's my choice, but you can't beat them. Minimum 5 days, not a problem. If I'm passing in less than 5 days, I'm over leveraged. If I'm over leveraged, I'm probably going to blow it. So don't mind that rule. 30 days is enough to pass an evaluation. I get paid every couple of weeks, 75%, which I'm happy with. There's two phases, 8% and 5%, which is nice. Max loss is big. Daily is the same as everybody else's. They let you trade EAs. You can hold over the weekends. You can trade over news. There's no other rules. They don't give a monkeys about how you trade. That's it. So I can't beat them. They're $499 for 100K of funding. They're the cheapest out there. Everybody else is somewhere between 500 to 550 plus. There's just no other prop for me and the way that I want to trade with the tools that I want to trade and the strategy that I want to trade that works as best. But there's lots that work the same, but they've been around longer and are bigger than everybody. It's the same old thing. If you're going down the high street and you want to buy a pair of Levi jeans or something, right? You can buy them from a huge multinational retailer at $50. Or you can buy them from the guy on the corner shop that set up 2 weeks ago for $50. Yeah. Where are you going to buy? Why? Because you got the support. You got the returns policy. You can probably do everything online. There's pluses, 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 pluses. They've been around for years. They're not going to disappear. If I get a broken zip in 3 weeks' time and I go back to that guy in the corner, is he going to be there? Is he going to argue with me? What's his returns policy? Don't know. Pick the big guy. Same with brokers. I'm going to go and find a new broker. Who shall I choose? Well, let's pick one that's been around for 15 years, has no commissions, really tight spreads, 200,000 customers worldwide, a multinational that sponsors a football team, or that new broker that started up 3 weeks ago in the Seychelles that's not regulated. People make far too much decision. There's too much that goes into people's decision-making processes about things. For me, personally, the big boy is always going to be the best because you have that crowd of faith in it. Yeah. The ratings. Yeah. You're going to always going to get negative reviews about everything. And it's usually people pissed off because they didn't read the rules, like me. I'm not pissed off, but I blew the fetal crest this morning because I just didn't pay attention. I was thinking I better close that out and I'll trade tomorrow, not realizing that the rules wrong. But, that's part of it. And I can pass quick enough with these guys that I can have multiple accounts going. And when I blow accounts, I know I can get them back very, very quickly. E8 are my backup. E8, virtually the same as my Forex funds from a rules perspective. They're actually a little better now in the fact that they give 60 days. I've never needed 60 days on an evaluation the way that I trade. I just don't need it. So their new extended account is pretty much the same as my Forex funds, except they've got a 5% edge on the payout. Everything else is the same. However, they're $50 more expensive per evaluation. 10 evaluations is $500. I can get another evaluation for free if I use my Forex funds. So it's tight between these two, but it would be my Forex funds or E8, one or the other. I find the E8 execution a little slower. So for scalping, I prefer my Forex funds, but that's not the end of the world. Morning PM, what do you think of top-down analysis traders? I am a top-down analysis trader. Look at my chart. What have I got on here? Top down, 4 hour. I have moving averages to tell me trend direction. Dropping down to my analysis time frame on the hourly, I have monthly and weekly levels from higher time frames. So I'm analyzing the monthly, down to the weekly, down to the 4 hour trend. Hourly, I'm looking for setups to execute on 5 minute chart when we get a reversal alert. Can't get much more top down than that. I start at the monthly and I go down to M5. Do you withdraw a percentage of your funds on prop? Or do you have a certain... I draw everything. Always draw everything when I draw. I don't do it the same as everybody else. I'm not trying to grow an account and trying to hit levels and try and do this, that, and the other. I chuck 5 grand in and I get more out. That's all I do with it. And some months I do crap with it. Some months I have fantastic withdrawals. It's so hit and miss. It's prop. It's 5%. Yeah, it's the 5%. That's what gets you every time. What gets me every time. Every time. I've never been hit by a total drawdown limit. I've always been hit by a day. The day that a prop firm comes out and says, these are the rules, right? You can trade any strategy you like. You can use EAs, yeah, and we just want you to get in and out. You don't have to use a stop. That's fine, okay? All we want is you do not lose 10% of your account. As soon as a prop firm comes out and says that, I am in. If they're $100 more expensive than anybody else, I'm in. Because I can trade within 10% drawdown with virtually any strategy safely. I can't trade within 5% as a position trader because the market doesn't allow me, but it would allow me to do that. But there's no prop firm out there that does this. And as soon as one of them says, all right, tell you what we'll do, we'll get rid of the daily drawdown limits. We just don't want you to lose 10%. Or 8%. I could probably live on 8. So I have a balance of 100K. Yeah. If I go down to 90, I blow it. Or 92, I blow it. Something like that. Just make it simple. You will get so many more people that can do this. They don't do it. That would be my absolute amazing prop firm. And I would snap anybody's armor. I'd be happy to pay $750 for 100K evaluation. I'd pay 50% more if one of them would do it. I could set my own up to do it, but I know the business model wouldn't work. This is why they don't do it, because the business model doesn't work. My Forex funds make $20 million a month out of evaluations. They pay out somewhere between 10 to 15 million to funded traders. They make 5 million out of evaluations. If they suddenly increased or lost the daily drawdown limit, so many more people would make money and the business model fails because they don't actually fund you with real money. They fund you with the failed evaluation fees. That's their business model. So it just doesn't work. That's why nobody does it. Lovely. Bella, I have your EA. What settings shall I use to pass the challenge? I can't answer that. H1M5 is probably the best thing to use. How do you personally pass evaluations quick? Scalp. If I need to pass quick, it depends. If I'm in an emergency mode and I need to pass quick, or I want to pass quick, I'll use E8 and I'll scalp. High risk, 1% risk per entry. So DAX. 5-minute ORB. 1% risk. Hold it. 2 to 3% return. Yeah. 3 trades. So when I've passed E8 in a day basically, and it was literally that. So all I did was I went short on the opening range break. I waited for a pullback. As soon as it started to go bearish, I entered a trade there. I added to the initial position. So I had double the risk. My average was there. It pushed down. It did it again and pushed. So you need a trend today. And all you do is you just keep adding until you hit 8%. Then you close the trades out. You're passed. Done. One trade. That's all you need. You need one. All you've got to do, think about it. And I say this all the time in it. Don't know. You hear me go on about this every day. I don't think there's been a day in the live room I haven't mentioned it until today, when I wouldn't have mentioned it if I hadn't been about to say what I'm about to say now. Market goes up, market goes down. It moves through time. There is always a 50% chance of your trade going in your direction or not. So every time you take an evaluation, if you were to take the opening range breakout, there's a 50% chance you will get on you might, if it's going to trend, you're going to get on in the right direction. If you get on in the right direction, don't get off until you hit 8%. Simple. You're passed. That's it. That's what I do. If I need to pass fast, I scalp high risk. But I can't sustain that. You can't sustain it. Look at today. That 5-minute pre-market today. Which way did it go first? That way. That way. Can't remember. It went long, I think, didn't it? So long, stopped out. Short, stopped out. 2 trades lost. Then we went double top, short. Well, no, it must have gone the other way, maybe. Double top, long. Was that a long? Did that trigger long? Yeah, you did it. So you'd lost one there. Depending if you're using a trailing stop, you could have lost somewhere between 3 to 5, 6 positions there, couldn't you? Definitely went short there, definitely stopped out. So minimum loss there is 3 to 4 positions, isn't it, really? 3 to 4% of your account. Now you're long and you're in. With your stop there, you're sitting at 2R. So let's say you lost 4%. You've got 2% back now. Some days it's just not going to work, but other days it will just go. Yesterday, right? I mean, I can't. You can't even put the thing on it. Yesterday, I only got up to 7. That is your opening range breakout yesterday. Can you imagine going 1% long there? Right, your target is 8%. That's 7, 8. You hit that within 20 minutes. Done. But if you do that every day, you will not survive. 0.25% to 0.5% risk is what I take on all my prop. But I don't use position trading as much. I do partially, but a lot of my stuff is based on purely on support resistance. Maybe they could flip the profit split for 10% drawdown, 20% profit only. I would take 50. I'd take 50. If I had 100 grand account, and they gave me a 50% profit split and a 10% drawdown, I could make 10% a month. I'd be happy to draw 5 grand out of that. I'd just do it 10 times. Or I'd just buy £250,000 accounts and pull 10k out that way. It's literally, that is it. That is the fault with prop. But The fault with prop is their business model. It's that 5%. The reason it's there is because they know statistically there isn't any strategies out there that can withstand a 5% daily drawdown limit, because you will have a losing run. Every strategy, even if it's got a 70% strike rate, which just doesn't exist. But if you could find a strategy with a 70% strike rate, 3 out of 10 trades are going to lose. It doesn't mean 3 out of 10 trades, the three trades in a row will lose and then it will start winning 7 times. It means that over a period of a year, if you took 1,000 trades, 300 of them are going to be losers. It doesn't mean that you can't get 10 of them in a trot. Of course you can. You know, they just know it. And they know the human psyche. They know that when you lose 1% and then you lose 1%, then you lose 1%, and you go, right, I'm going to stop for the day, I'm going to come back tomorrow. The next day you're coming back with a 3% deficit. Your face and your brain is going, got to get that 3% back. I'll go to 1.5% on this one. Oh, lost. Oh, now I'm 4.5% down. Damn. Right, screw it. Let's go 3%. Let's martingale it. That's what 99% of people do. Because you've got a tight margin, it puts pressure on you. When you're under pressure, you tend to pop. This is why we risk 0.25% on a trade, because if it goes the wrong way, I couldn't give a monkeys. I'll just deal with it later. I've got 2 trades on the New Zealand dollar yen at the moment. Look at it. My average is all the way down here. I am 51 points, 51 pips in drawdown. That's over half of its average daily range against me. And I'm sitting in 0.6% of drawdown on the account. I couldn't care less. That's the way to do it. If you're worried about it when you put the trade on, you're over leveraged. If you're not worried about it, it's going to work. It will work every time. It will, because you just let it go. You let it work. But that would be lovely. I'm finding a hybrid approach works best. Position and price action. Exactly what I do, Brian. My strategy on prop is very much the same as here. It's support resistance and propulsion. Yeah. If we get to that level, I run 2 strategies. One of them is this, basically. I will get in at support resistance short, and I'll look for somewhere around a 1.5 to 2R with a stop loss. But I will risk 0.5%. Yeah. So I'm looking to make somewhere in the region of 0.751% per trade. Yeah. And it's a real slow burner. But my P&L looks like that. And it is a stop loss. But it's on prop. So I don't need to make a lot of money. If I can get a good run of trades that makes 5 grand, I pull it out the account. That's it. Pull out 5 grand. When I'm doing evaluations, I'll go in with higher risk. The other one is basically position trading with drawdown control. So it's exactly what you see running on the on here. But I execute the trades manually at support resistance. So I focus on support resistance. So I'm just trying to find. So here, for example, pound odd. If we get down to here and an RSI extension occurs, I will take an entry. I'll put the EA on basically and say, get me in, and I'll scale into it. Normally it will work, and I'll go for 0.5% to 1%. That's it. It's exactly the same, except I've got to work within restrictions of 5% drawdown, which means I end up taking big loss days. Every now and again, I get a loss day where like yesterday, I had to close out on Fidelcrest. I was up 7.5%. Yesterday, I had to close out 4%. I had no choice because they forced me to. Today, I can't even remember what trades I had on. Very, very similar to H1, mean reversion. So it was these. That's pretty much what I had on, look. These positions. But I had to shut them because their rules said I had to shut them. So I had to force a loss. I don't have to force a loss with my own money. That's the big difference. It does work though, but you blow loads. I blow accounts all the time. The ones I don't blow pay for the ones that I blow. It's maths, like I've said before. You spend $5,000 doing 10 evaluations. You get 2 or 3 of them over the line, funded, and 1 or 2 of those you can trade up above $5,000. You just made profit. That's it. It's just maths. It's a business. Can I get to preset? Yeah, there's loads of Hendrik. Go onto the website. It's all on the website. So if you go onto any of the EA, everything you need is on the website. Set files, manual, videos galore. Everything you need about everything I do is all out there. Make an educated decision based on what you see. Oh, look, New Zealand dollar yen going up again. It is. It's rallying again. New Zealand, this is yen weakness. Then all the yen's pushing. And obviously New Zealand is pushing. So this is the perfect storm at the moment. New Zealand dollar yen. You've got a strong New Zealand coupled with a weak yen, giving you a super strong New Zealand yen. But, you know, look, I'm in it from here. Moved over an ADR since I got in 2 days ago. Most people will have stopped out on 10 trades trying to short this so far. You know, it's just psychology change. What would depend? That would depend on them changing their business model to their supposed actual model they advertise to fund traders. Exactly. Exactly. There are some prop firms out there that do fund you, and one of them is on my list, Audacity Capital. Audacity Capital do actually fund traders, but look at their maximum account size, 120,000. Yeah. They're not giving you an absolute fortune. And look at their targets, 10% and 10%. Bloody hard to get funded. Audacity are one of the original seated props in London that you used to be able to trade with. If you wanted to trade prop, you had to go to the office and trade prop on the desk, in the desk. You paid for the desk. All they've done is they've converted their business model, which is actually to fund traders from a desk to the online space. But that's real capital. But you'll find it very hard to get funded with Audacity because the rules are stricter. Same with CTI. CTI fund you, but CTI will not give you simple, easy to fake rules. Your evaluation on CTI is a minimum of 20 days. You have to show consistency for a minimum of 20 days. Look at their limits, 70K. They don't give you a lot of money. They only pay you half of it. Your target's high. It's only a one-stage evaluation, but they want you to show consistency because they're putting real cash behind you. None of this, let's go long 2%, cross our fingers and hope the DAX rallies today. You can't do it because they're giving you real money. All the others, it's fake. What I want is one of these guys, Audacity or CTI, to go, tell you what, we'll give you a 10% drawdown limit. Come and prove you can trade. Fine. I will. They won't do it. Morning all. Is there anyone who also have a data gap at IC Markets, MT5? I don't know. I haven't got IC Markets. I'm using the market reversal, let's say, on demo and placing trades on different platform. What margin requirements are needed to take each position? That's down to your broker. Struggling have enough margin. Change brokers then. Right, so when you're talking about margin is directly related to leverage. So you need a broker with a leverage of a minimum of 100 to 1 to position trade. 200 to 1, 500 to 1, doesn't matter what it is. It's got to be above 100 to 1. More the better, basically. But you shouldn't have a problem 100 to 1. But if you're trading with 30 to 1 or 10 to 1, it's not going to happen. You won't be able to get the positions on. Will your strategy work with the US broker? Yeah, as long as you don't hedge. You can't hedge. I just wonder if it's different on your choice of brokers. Yeah. So the broker I recommend is Forex. So if you go to my recommendations, there's a link to my broker there, Forex. You can get whatever leverage you like, basically. Although I'm not sure if they take US. I'm in the UK. I haven't got time to do the research for everybody on what is the best broker for their country. You just got to do this yourself, basically. But if you're in the UK, Forex are brilliant. Forex, Axie, high leverage Forex and Axie, low leverage Darwin X. Got to change that. Must change that because they've changed that. I'm going to get rid of them on there actually. On the other list, but Pound New Zealand, first ADR of the day. Pound New Zealand ADR coming down hard. This New Zealand dollar is going nuts. Pound is a little weak today, but this is mainly New Zealand dollar rallying at the moment, which is driving the Pound New Zealand down. So ADR on the Pound New Zealand just hitting below the 75 as well. Pound New Zealand to the short side. So good looking long opportunity there. I believe Robo doesn't allow us from the US. Yeah, maybe not. They've got two websites. Your country was determined as United Kingdom. Yeah. So this is something you need to be aware of with all brokers. Yeah. There's always different websites, usually with most brokers for different countries. So what it's trying to do here is it's trying to send me to Robo Markets. If I click that link, I go to Robo Markets, which is exactly the same website, pretty much. Yeah. But it's Robo Markets now. Difference being, these are UK regulated and I can only get 1 to 30 leverage. If I go and sign up with Robo Forex, who accept people from any country all over the world, pretty much apart from the US, I can get 1,000 to 1 leverage because they put me in Cyprus. Cyprus? Where do they put me? I've forgotten. Oh, Belize, they put me in. Yeah, so there's always a way to get more leverage. You just have to go out and do the research. There's lots of broker comparison websites out there. If you Google broker comparison websites, go and ask ChatGPT. Session's expired. I'll log in another time. Go and ask ChatGPT. Who is the best broker that offers 100 to 1 leverage and accepts US clients? It'll tell you. Because it knows everything. Oh, speaking of that, I've changed the position trading bootcamp to they're all blog posts now. So it's basically the same. Obviously, it's just the days. But instead of watching them all on here, you now click on each one. So what I've had is OpenAI transcribe my entire bootcamp into text. So for those that are foreign language, you can now translate everything if you want to. And we now have closed caption. Again, AI did it for me. Brilliant. AI, it's just taken over the world. So yeah, so I'm in the process of doing all of my videos. So every video on the website will be changed so that it's got a complete transcript as well. A lot of it might not make sense because I'll be saying things like, if you look at this chart, and it'll be like, what chart? I'm not going as far as getting AI to do the photos for me, take a screenshot. I'm pretty sure it probably could, but anyway, I'll leave it there for this morning. So yeah, DAX this morning, your opening range break was to the upside eventually after an incredible pain. But you've got a 1 hour return at the moment on your long. That's it. So highly unlikely anybody made any money on anything today out of that, unless you literally took the 5 minute. You took the 5 minute today, you went short, stopped out, gone long. You've made more back than you've gone long, but you probably break even. So it's not looking good. We've got that level coming up as well on the DAX. So just watch this level. We're almost there. So this is the 2021 high. So if you're looking for a good short opportunity today, short that with half an ADR, stop, and just hold. It could be an absolute huge winning short. Right, I'll be back to 220 this afternoon. There's a few opportunities there, but they're pretty much the same we've had all week because stuff's kind of sideways at the minute. So I'll be back 220. We'll trade the NASDAQ and the Dow as usual. Anything you need, I'll be in the Telegram group as usual. Yeah, we'll see how we get on this afternoon. But all a bit sideways at the moment. So, or just ever so slightly squeezing in the other direction. So we'll see how we get on. And there's no news, obviously, until Powell. So Canadian, beware of CAD, obviously, for the retail. Might get some movement off the CAD, but not a lot. Powell at 4 is going to be the main one today that's going to potentially kick it. So we'll see. All right, so have a good day. I will be back at 220. I'll see you then. If not, back at 7:50 usual time Monday morning. Have a good day.